Honeywell beating estimates by 7 cents with adjusted quarterly profit of $2.10 a share, also raising its full-year forecast. Joining us right now in an exclusive interview to talk about the quarter and his economic outlook is Honeywell's chairman and CEO, Darius Adamczyk. And Darius, thanks for being here this morning. The numbers, it looks like, beat on every metric that I can see. You're also raising your guidance for the full year on a lot of different metrics, too. That's pretty counter to what we've heard about the coming recession and a slowdown. What are you seeing?
Well, good to be with you, Becky. Obviously, we're very pleased with our Q2 numbers. I mean, like you said, we beat on every dimension, and our market exposure is actually very favorable. If we think about our top two businesses, that being aerospace and energy, we actually see very favorable trends. As you mentioned, our orders were up 12%. Our backlog is up 12%. So a lot of these headwinds that others are seeing of us being a little bit more long cycle oriented, we're actually seeing a pretty strong environment. And there's a lot of debate out there about whether or not we have a recession coming. But in my view, as we look at a couple of our top markets, namely aerospace, energy, building technologies, all of these we've shown very robust growth in Q2. And I expect that to continue independent of what may happen to the broader economic conditions.
How much of what you're seeing is just because of this huge surge in travel demand after a shutdown in travel during the pandemic?
Obviously, some of that is attributed to it, but whether we look at sort of the OEM manufacturing rates, which are going up, they're all trying to go up, whether it's business aviation or air transport. Obviously the air miles are up, but let's be honest. I mean, we're nowhere near where we were in international travel yet, and we don't expect that to fully recover until 2024. We're going to be at the 2019 travel levels for narrow bodies probably in next year, and for wide bodies in 2024. So although we've had some tailwinds in terms of air travel, we think that there is still more ahead. And obviously, as I anticipated, private aviation has been a big winner too. That's been up substantially, both on the air miles flown as well as the build rates and order rates for some of our customers.
Darius, one of the big questions has been this issue of inflation and how much that's going to eat into people's profits. One of the things I found interesting is that you're raising not only your organic growth numbers and your adjusted earnings per share, but also your segment margin, meaning you think you can handle higher costs coming in, or meaning you think inflation is slowing down?
Well, I mean, inflation has been something that's been tough to deal with for a while. I mean, we have to remember management teams have not had to deal with inflation at this level for probably 30, 40 years, really. And it's a new playbook for all of us. So we've been trying to adjust our costs, our pricing base to make sure that we're covering. I think we're doing a reasonably good job at that. Our commercial excellence programs, our mix is also favorable. So we're really trying to manage all the levers we can to continue to grow the top line and grow the bottom line at the same time, which frankly hasn't been easy in this environment because we're trying to really understand where the inflation is, where it's coming from. I would just point out that one of the key transformations for Honeywell the last 3 to 5 years has been our digital savviness, particularly in terms of how we operate the company. And right now, I can tell you exactly what the inflation is for any one of our 37 business units. And that level of precision and data availability is really helping us run the business much better. That's really what's been the big enabler in terms of running the business and understanding what we're facing.
What unit is facing the highest inflation number, and what is it?
Yeah, I mean, we're seeing things anywhere from 8 to 15%. I would say some of the base chemicals, some of the aluminum that we're seeing, ethylene has been high. So probably PMT is one of our bigger businesses that's facing some of the inflation, but they've also done a really nice job in trying to mitigate best they can. I'm not ready to say inflation is flattened yet. We need to see more time to see what happens. We're anticipating more inflation in the second half, and we're just going to have to stay ahead of it.